The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look here at this DAX this morning. As you can see here, this was one of the real keys to why the market was going to rally yesterday. We started to tell you that we had those divergences in the NASDAQ and in the Dow Jones, but this was the real key. If you looked at the New York Stock Exchange Index, you would have also seen the same type of divergence. I'm not going to post those in here because we did it yesterday several times. Steve Rhodes was also talking about the possibility of a really strong bottom in the IBB, which certainly led the market up. So that's the main thing. By the way, we'll have our good friend Stan Harley of the Stan Harley Stock Market Letter on today. And I was just informed a little while ago by one of our folks here that visits the den occasionally that how many people that we've had as a guest here that have been Market Digest leaders. I mean, it's just really amazing. We'll start off with Steve Rhodes here at TFNN. He's the newest leader. We have Stan Harley, who's always, he was first or second. Bill Meridian, who was first or second. Kerry Szymanski, who's been first or second. Bob Miner of Dynamic Trader, he's first or second. Mark Leibowitz of Volume Reversal, and also Barry Rosen, the astrology guy. And then we're going to have one more next week. We're going to have Tim Boast as a new guest, and hopefully we'll have Tim on next week. He's out of one of my favorite, Sarah and I's favorite places in the whole world, in Sarasota, Florida. So let's take a look now at the FTSE, because that's another one that was giving a really strong indication, because you had higher bottoms, very, very distinct higher bottoms with a Gartley pattern forming yesterday, right at a perfect 61% retracement. So that was a really interesting spot to, to really look at where that was probably going to bottom. And of course, we did. There was another divergence right there too, because you can see where the FTSE was compared to the Dow Jones. The rest of the world did not, follow along with this thing that's going on with the what do they call those things? Tariffs, and I'm not so sure that means very much at all. I'm not even sure. I want to share something with you just a little bit, something I have a really strong opinion on and believe in, because John Hill and I wrote a book about that, and that is the opening price. Just take a look at this IPO yesterday in Spotify, folks. Look where it opens. It opens at 169. It closes at 136. Well, actually closes at 146 because it bounced a little bit after market. But just by using the opening price here, you would have saved a ton of money. So when you see these IPOs, buy them if they're above the open. But if they're below the opening, my goodness, don't buy them then. That's not the best place to take a shot at it, because that means the odds of you winning are less than 30%, and you'd like to have the odds heavily in your favor. So keep that in mind when you're looking at these IPOs. In fact, it works when you're ready to buy anything during the day. If you're above the opening, you've got a good chance of winning, better than 7 out of 10. But if you're buying and you're below the opening, it's you got the odds against you. The same thing is true on the short side. So just keep that in mind. Now, we want to follow through with a couple things we've been watching for the last few days. If you'll remember, we've been having a very, very close eye on these feeder cattle. In fact, we're going to cover the cattle complex today because we had such a big move yesterday, thanks to some of the folks here in the den were pointing out that, cattle were nearly limit down and turned around and went limit up. This is what we've been looking for in the August feeders, and we did this for a technical basis. We weren't actually trading August feeders, but we were looking for them to bottom down there at that 1.618 level around the April 5th level. And if you'll take a look what happened yesterday, I mean, it was, it hit it spot on. I mean, within 20 cents of the exact 1.618 expansion and closed, sharply higher. You can't ask for any better technical stuff than that. It didn't always work that way, of course, but this one, was pretty much spot on, and that's what you'd like to see. Now, if we take a look at a couple of these other markets, let's just look at August live cattle, because we did the same thing, and that was even a crazier one because we went limit down to limit up. We had that's a $2,000 swing, folks. That's like 40 points in the S&P, which isn't much anymore. But anyway, you'll notice here that we did have this big rally. Now, what will happen next most probably is that you'll either have some follow through because of the action that we had, or it'll start consolidating. But this should be a major bottom down here in the cattle. If you notice the high that we made, back in mid-February, just a month ago, that was a beautiful 3-drive pattern with a 78% retracement level. So that tells us that, it had some strong resistance up there, and it sure showed that it did. It dropped, 18 cents, which is better than $7,000 in a cattle contract in just a month. So this market's very, very oversold now, and then we'll see what happens, from that level. The next one we want to take a quick look at, of course, is the live hogs. This was another one that we talked about yesterday. It did exactly, in fact, all these meats came in right at the same time here. You'll notice that we had a 3-drive pattern there that was hit exactly the 1.27 of the August low, which was that eclipse, and just spot on at that 1.27. And here again, it rallied 4 handles very, very quickly. So there's a pretty good bottom here in the hog market and also the cattle market. Whether this means the tariffs are going to be scaled back or dismantled or something, I have no idea. All I know is the technical picture is really telling you that you've had a blow off to the downside, and you should be in for a really strong rally to the upside. So that's the main thing to keep in mind when you're watching these things, is that they don't always work, but when they do work, you've got a really good chance to see some really good action, and with a really small risk. In fact, in the den yesterday, the folks were talking about it, Mr. P and Fletch and a couple other, and Mr. Z, of course, were all talking about, what a good buy the cattle were down there at that 97 level, and they closed at 102. So that was a very, very low risk with a high probability of working, and those are the kinds that you'd really like to see. Okay, now let's move on here to the next thing that we need to talk about today, and that is the dollar. The dollar is strengthening again, just like we had hoped it would, and we were expecting it to strengthen. And by the way of doing that was, we've been short that Canadian dollar that has done extremely well, and we'll be interested to see if we can continue that move to the downside. It looks like it's going to go a lot lower. I'll cover that a little bit later. But one thing I did want to mention yesterday is we talked about this just shortly, a very, very short period of time, and that was this small pattern that we had in the gold market when it hit the exact 78% level up there at 1352. 1352 was the exact 78% level. And look at that 3-drive pattern that occurred there with the ABCD. That's Mother God and Country. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and what we want to do here is take a quick look at this U.S. dollar index because we've had some really strong tests here over the past few weeks, and specifically last week when we got down to that 88.50 level, and now we've started to move. We're substantially above 90 now, and that's telling us that this market seems like it wants to go higher. Remember, on the long-term weekly chart, that 88 level was exactly a 61% retracement on the weekly. That's one of the reasons why we thought that could be a false breakout, and indeed it was. And the good thing was you didn't have to wait too much or risk very much to see if it was a false breakout. Now, if that market would have continued to the downside, that would not have been a false breakout, and you'd have certainly been out of that trade very, very quickly. But when you look at that 61% retracement, pay very, very close attention to it, because those numbers, 618 and 1.618, are the two powerful numbers that define, Elliott wave analysis, Fibonacci numbers, the whole thing. That's the main thing that you want to be looking at. I read a book once by Greta Woodrue. She was from Connecticut, and the name. What was the name of that book? Oh, shucks. I can't remember the name of the book. My friend Byron Tucker gave me the book, but it was about a lady that channeled an extraterrestrial, and she asked him, "How do I get in touch with you?" And he said to it was Greta Woodrue, and it was she's from Connecticut. It's in there in my other library, and I'll go look at it later. But she said if you wanted to talk to him, to dial the intergalactic phone number, and that was 618. I thought that was the funniest part of the book. I don't know if any of that was true, but it was entertaining, if nothing else. So anyway, we'll move on to the normal stuff here just a little bit. We're talking a little bit here about Tesla in the den today. Tesla is one of the big shorts that we have from Jim Chanos, and it certainly he believes if you're burning cash, the business is not going to work. But it's pretty hard to fade Elon Musk. He's a pretty smart guy. And I don't know anything about it, but the stock has been under pressure, but it's not been any more pressure than in the other stocks. I mean, it's certainly acted better than Amazon and of course Facebook, but yeah, who knows? Frankly, I don't trust any car that you can't hear, but that's going back to my days of the muscle cars. And anyway, we'll move on to some of these other things to look at here. With these markets moving like they are, one thing we ought to look at here is what's really happening in the soybean market. And I'd like to, since we're talking about 618 and 1.618, let's just take a look at what soybeans have done here, over the past year. And I think you'll get an idea of why we like, on a slide of light. Thank you, Marshall. That's exactly right. It was on a slide of light by Greta Woodhue. Yep, that's what it is. I don't know how you ever found that book, Marshall. Not many people. There you go. Here's the soybean chart. Going back to last August, you'll notice the A, B, C that I've marked. I put the D spot wrong. Doggone it. The D should be up there at the top, folks. That's what happens when you do these things in the middle of the night. But you'll notice here that that's a big A, B, C, D pattern there. And it hit the exact 1.618 on the high and hit the exact 618 on the bottom both times. I mean, twice it did it. I mean, it was it did it back in January, and we were buying there. And look what happened here with this thing with the tariffs. I mean, it came right back down to the 61% retracement. It went 2 cents below it. That's only $100, in the bean contract. So this market really wants to go higher. It's shutting. Oh, we've got a caller from Philadelphia in. John, are you there?
Larry, thank you for highlighting that soybean contract. That is so cool.
Yeah, well, the big thing is that 1.618, the day of the, 2 days before these tariffs came in. Well, that's the main thing. The caller is Mr. Z from Philadelphia, John Shaney. John, I was yesterday morning, it was really funny. It was around 4 in the morning. I got a call from Sim Only, which for him to call that early had to be something big, and he was telling me what was happening, that the beans were under a great deal of pressure, and he really wanted to be a buyer. And we pulled this chart up, and of course they were trading at around the 10.05 level, and so he puts them on, and they've rallied better than 25 cents then at that time. But the corn did almost the same thing. It went right down to a perfect 78% level. So these markets still look very, very solid to me, and also to Rich Anderson, and also to Cy. I don't know what you're feeling on that.
Well, likewise, there's nothing intelligent I can add that adds to size or your work. I might just I called in. I wanted to ask you the question: if you could possibly pull up the 1 hour chart and see if you can share with us any guidance on how to manage a long trade, assuming you bought down closer to $10, using the info we've just gotten off the hourly chart since, please.
Well, John, I tell you, if I try to do that, I'll probably lose my connection. But I can tell you just from looking at your chart last night that level down there at the 9.99 level in these November beans is really important. The last price I saw, it was trading about 30 cents higher. And so I don't think they should visit that level even close again. So I would say, put a stop in at like 10.06 or something like that to protect the profit and let it go. When we got these news announcements coming out about tariffs all the time, people react violently to them, but they forget that, soybeans, they're needed no matter what happens. Oil they can get by. Oil is indigestible. You can't eat that, but soybeans you have to eat. So remember, foodstuffs are something we can't get along without, but we can get along without oil. But the main thing is that with these news items come out there, you just never know, because you could easily go down there and drop another 50 cents if something really bad came out of China or Washington or something like that on an announcement. But right now, they've handled that announcement extremely well, because the number one thing they were trying to hit us with was that soybean tariff. And that really doesn't mean very much because soybeans have an inelastic demand. It doesn't make any difference what the price is. People are going to buy it. It's based on the supply and demand of what the crop is, and we're in a drought situation in some of these places, so you better be careful being short here. That's what Cy says, so we'll see.
Very good. Thanks so much for that. Larry, I called in primarily, I wanted to ask you, please, about the Canadian dollar, USCD.
You bet.
And ask if you could pull up, say, the hour or the 4-hour chart that you do for yourself quite a bit. The reason, what my question is, we all saw the rally into March up to 131, which is a textbook ABCD on the weekly chart. And now we've started to come down. My question is, please, can you share guidance using that 4 or 1 hour chart? What to do, where to run stops, assuming you're short, attempting to navigate a further decline, please?
My stops would be at 129, John, and the first objective is 126.25. That's a 1.618 expansion of the AB leg. It's also a 61% retracement off of the January low, and it will also be an ABCD pattern. I've posted that into the room so that you'll be able to see that. But I'll be updating it all the time, my friend, so stay tuned.
Great. Thanks so much.
Hey, thanks, John. May God bless. Stay tuned for Stan Harley, Harley Stock Market Letter.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got our good friend Stan Harley on of the Stan Harley Stock Market Letter. Stan, how are you?
Good morning, Larry. I'm doing awesome.
Well, that's great. We've had several people from the den wanting to thank you for alerting us of a possible big correction coming in January, and they certainly remembered that. And the other question that one of our denners asked is, how do you go about becoming a market timer? Who do you have to send in your recommendations and what you're doing each week, or how does that work?
Larry, I've been sending my information to Timer Digest for, 20 years now, I believe. When I started publishing the newsletter back in the 1990s. Timer Digest tracks, I think, about 150 folks like me who publish investment advice, and they keep a track of us every single day for the stock market, for bonds, and for precious metals.
Wow, that's good.
It doesn't give one an opportunity to take a vacation because we're being scored every single day, whether we go to the mountains or not. We are being scored. So that's how it works. They will want to receive a person's advice for 1 year before they actually start the timing clock. So that's one of their provisions. But yep, I've been doing it for 20 years. I also sent my material to Hulbert Financial Digest, but he's now in a new line of business, I believe. So just Timer Digest right now.
Well, that's really good. Well, one of our denners here that has our show here is Steve Rhodes, and he just got the Gold Timer Award. So we've been very lucky to have you on, and some of the others. We've had, quite a few of the Timer Digests, and that's one of the advantages of getting older, Stan. You got a lot of people that you met along the way, So listen. You're talking in your letter this week. You're talking about a choppy market for the next several months, and we're certainly starting to see that. You want to give us some insight on this?
Yes, Larry. Following the January 26 high, the market dropped down. It made what I'm calling essentially a double bottom formation. The first low was on February 9th. The second low occurred on April the 2nd. And now I believe we're going up. That low was part and parcel of a cycle that I've tracked for many, many years. It averages 35 weeks, and it's an accordion, so it expands and contracts. This last cycle expanded by approximately 1.236. So I would expect the next one will probably contract to about 0.764, so the sum of those equals to 2. But over the long haul, the average of that intermediate cycle is right at 35 weeks. It's about 169, 170 trading days on average. So I think we've seen the low in that cycle. The low occurred on the 2nd of April, and now we're going to power higher here. The last occurrence of that cycle, which ran from May 18th low into the January 26 high, that was characterized, what you and I have talked about in the past, by right translation. Right translation is indicative of bull market structure. And,
yes, it certainly is, yes.
And that what that means is the crest or the price high of the cycle occurs to the right of the midpoint. Typically, we tend to see the crest of a cycle occur around the 2/3 to 3/4 point in the cycle. This last one occurred well to the right. So what happens when we get the price high pushed well to the right of the cycle? We get what I call extreme right translation. And when that occurs, you get a very sharp, short downdraft, like we just saw. And sometimes it's punctuated by a single bottom. Sometimes there's a retest with divergences. It's always different. But then the market stabilizes and it heads higher once again. And that's what I'm expecting here. And so what I'll be looking for is evidence of either left or right translation in this next cycle.
Stan, of the things that Jim Hurst wrote about, I always enjoyed the right translation and left translation as the best. It made the greatest sense. I know his cycles, were static cycles during the time because he wasn't using Fibonacci expansion and contraction, but that high translation was really very, very important. I've had a lot of chats with Peter Leides from stock market cycles, and he also thought that was one of the most important things that he had come up with. I think he got the idea from our, the fellow at the Foundation for the Study of Cycles, and his name slips. Boy, this is a bad sign. Oh my goodness! I used to talk to Gertrude Shirk all the time. Edward Dewey. I used to talk to Shirk.
Yes.
Yeah, I used to talk to Gertrude Shirk all the time.
Yes.
And he was always interested in that. And I don't know if you knew this or not, but towards the end of his life, Dewey was certainly into astrology. He really got into that, very, very heavily. Let's move on to your chart of the one that I like the best, and the one that predicted this market bottom here just yesterday, is the fact that you were looking at this 95-day trading cycle that's in here. And you want to talk to us about that a little bit?
Sure. Yes, Larry. I noted that the market's been undergoing a cycle that's been averaging about 95 trading days. It's gone between 91 to about 102 over the last couple of years, with the average falling right about 95, and a 0.618 application of that cycle fell right on April the 2nd. I also noted that some Fibonacci relationships involving the February 9th low, the March 2nd low, and the March 13th high, 0.382, 0.236, 0.382, numbers that I know you are very, very familiar with, as are many of our listeners. That, too, the calculation there fell also on April the 2nd. And so I was looking for a low, as I said in the publication, in the vicinity of April the 2nd. And of course, we now know, looking back, that the low did come on April the 2nd. So these things, with a little grunt work, we can calculate these turning points in advance. It doesn't mean we're going to nail everyone right to the day.
Oh, yeah.
But in this case, we did.
Well, that's what you're looking for. Is
and from this point on, and probability, yes. And what I'm trying to say is what you and I and everyone else needs to do as an analyst is to sit down and study chart patterns and look for evidence of recurring lows, for what I'm talking about right now. They tend to be more regular, and then what one can do is then put that information into a spreadsheet, or you could just do it on a piece of paper, but keep a detailed analysis. And you can either do it with just a calculator, or you can dump it into a spreadsheet, and you can compute the historical standard deviation, so that if you know a cycle length that's been averaging 95 trading days, well, that doesn't mean it's exactly 95. It's 95 plus or minus what? And so that's what statisticians do. We do just some simple analysis there so that we can project into the future and then apply some standard deviation about that projected turn, and then look for corroborating evidence to back it up that the cycle has turned. Highs are, as you and I know, are a little bit more challenging because although lows tend to be more regular, and I use that term in quotation, highs move around a lot more because of this phenomenon of left and right translation. Highs are a lot more difficult to nail down.
Yeah, I think the reasoning for that is fear is a greater emotion than greed, and fear is on the downside, so you see easier calculations, I think. But I don't know if that's correct or not, but I agree with that. Bottoms are certainly a lot easier than tops. Tops get pretty emotional, and especially when you're talking about money, and you can see that in Bitcoin and some of the other markets that we've seen along the way. So we got to take a break here. Could you stay with us for a little bit longer, Stan?
Absolutely, my pleasure.
Okay.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back talking with Stan Harley, the Stan Harley Stock Market Letter. And Stan, while we were chatting, I got a Skype message from one of my students from over in the UK, and he was very angry with himself yesterday because he had bought the market right off the low when we were discussing the possibility of a bottom there yesterday, and he was angry with himself because he got out about halfway up. And he asked me, what he could do to prevent that. And I said, stop trading. I said, we don't know what's going to happen next. I said, and what you were mentioning just a minute ago about probability, you'd never know. It could have stopped right at that spot. So I didn't know how to answer him other than to say to stop trading. I did it as a joke, of course. But I said, welcome to the world of trading, because you're never going to get the exact low or the exact high. I mean, very few people get that. So probability is the name of the game.
Yeah, I think a good precept for most of us to follow is try to get a good slice out of the middle. Mm-hmm. If you can wait for the market to turn and then go long, if you're looking for a place to go long, and if you get out a little early, that's okay. But if you get a good piece out of the middle as a trader, you should pat yourself on the back.
That's right, because if you stop and think, there's only one or two people that ever get the high or low. I mean, there's just virtually no volume down there. I mean, it's ridiculous to even think about that. Stan, let's talk a little bit about this price volatility and market internals that you've had in your letter. I'd like to know a little bit more about that. That's something that I don't follow nearly as closely as I should because, I'm just a pattern recognition person, but I can see patterns in these charts also.
Well, I look at a lot of things, Larry. First of all, I look for divergences, and when I'm looking at the U.S. stock market, I track what I call the Big Five, and I watch them very close for evidences of either confirmation or divergences. And the Big Five for me are the Dow Jones Industrials, the Dow Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. Mm-hmm. And I want to see evidence of all five of those either confirming an up move or a down move, or look for divergences. And for example, at the April 2nd low, among the Big Five, we saw 4 of those components not take out the February 9th low, but one of them did, the Dow Industrials. So that's a divergence. And that to me says, okay, wake up, wipe off your glasses, pay attention to what's going on. Something's wrong with this picture. And thus far, it looks to me like that was the low. I also take a peek beneath the hood and look at market internals. And for me, market internals are advances and declines, and new highs and new lows. First of all, looking at advances and declines, I track the advanced decline line. which is something many market technicians have done for a long time. Very often, but not always, but very often, the advanced decline line tops out ahead of an important cycle peak, but not always. For example, in May of 2011, the advanced decline line didn't top out till 46 trading days after the May 2nd, 2011 peak.
That's highly unusual, isn't it?
That it is, but there is no absolute in this business.
Oh yeah.
In the current environment, the market topped out on January 26th, and the AD line topped out coincident with the high. So some technicians are really pounding the table saying we must see a divergence between the AD line and the popular averages, and I say, not so fast. Sometimes we get it, and sometimes we don't. And in this case, we did not. And the same thing with new highs and new lows. The structure there just was not indicative of any glaring divergence at the January high. We had an extended advance, to be sure, but no significant divergences, which then takes me back to what I was talking about a moment ago, Larry, and that is the structure right now reminds me a lot of what happened between May of 2011 and October of 2011. And that was a then current, what I call a 4-year cycle peak. The market dropped 21% from high to low. It wasn't straight down. It rolled over slowly, but nevertheless, it went down for about 5 months with no divergences, warning of that top. And I think we're probably in a similar environment. That 4-year cycle contracted to, I believe, about 30 months from the usual 48, 49. And I think we could be in a similar environment right now where we've gone down, we've made a low here just a few days ago. We're going to go higher, maybe left translation. Then we come back down and make another low right around the 1st of October. And that would be something akin to the October 2011 bottom.
Well, that was a very significant bottom down there. I remember that very vividly because I happened to be in Florida at that time, and it was screaming that it wanted to be bought, that's for sure. So we'll be watching that again.
Yeah, I think there's a possibility we could be in a very similar environment. We'll just have to watch and see.
Okay. Now, the next one that I wanted to talk about was your international markets, the FTSE, and also the DAX, because I noticed that one of the patterns that we watch here is a 3-drive pattern, and we see a very distinct one in the DAX, and we've also seen one in the FTSE. So here again, you're seeing confirmation of some type of a bottom. Is that correct?
I believe so, yes. And the European markets are up strongly today. What is interesting is I follow the big three, the DAX, the CAC, and the UK FTSE, with particular emphasis on the latter. As we were coming down during the month of March, I noted that the big three European indices broke below their February bottom, and ours did not, at least not until April 2nd. And then we, of course, saw the Dow break lower. That told me there was a good possibility that we might break the February lows. By how much or how many among our own indices, of course, was unknowable until after the fact. But it certainly gave me pause to be watchful for that sort of thing. And that is, in fact, what has happened. And now it looks like we're powering higher. Europe is up about 2% today. And
wow,
we're
2%. That's substantial.
That is substantial, yes, last I checked. We opened higher this morning. We've taken about half of it back this morning. Well, let's see how this thing evolves. But I suspect we're probably going to close higher for the day.
I know this is something that you don't feature in your letter, but I know you follow it. Any feeling on the gold market, Stan?
Well, actually, I do track the gold market.
Oh, I didn't see that. I'm sorry.
Yes. I think the metals complex is in essentially a sideways congestion band. It could last for some period of time. Every time we get up around the 1375 or get close to it, we tend to back off. We started again pushing up towards that level here a few days ago and have since backed off. Ultimately, I think we might tag that level, but I don't think we're going to break out to the upside. I think we've got more months, maybe even a couple of years of sideways congestion here before we're going to see anything substantially higher in the metals complex.
Well, listen, my friend, I want to thank you for being on the show. We'll have you on again in a few weeks if you could, and especially I wrote in a note to myself to have you on in October. We try to have you on once a month anyway, but I certainly want to be talking to you about this bottom that you could be looking at. And that's a very strong seasonal, and you do look at seasonals, because we have a big one coming up, sell in May, go away type thing. Will you be watching that one too?
Larry, I'm not a big fan of that, but I keep it in the back of my mind.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation, as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I don't know whether we lost Stan or not at the very end because it got cut off. I assume that we did, but you can reach him by going to Stan. Are you there?
I am still here, yes indeed.
Hey, good. Tell the folks how they can reach you, my friend. I'm sorry, when the music comes on, sometimes they have to pay the bill, so the commercials come first, of course. But tell the folks how they can get a copy of your letter and reach you if they're interested.
I have a website, harleymarketletter.com. Folks can log on to.
Well, that's good. How do you like living in Arizona so far?
I love it here, Larry.
Yeah, isn't the weather great this time of the year? Yeah.
I went out this morning, and it's nice and cool, and it's just beautiful sunrise this morning here in the Phoenix area.
Do you see any wildlife where you are, or is most of it gone now? You see any coyotes or javelinas or anything?
Well, no, we're in the city limits, so no, don't see any of those.
Yeah, we still see some of them here in Tucson, but we're still in cowboy country down here. So anyway, we hope to have you on again soon, and I want to get up there and have lunch with you and your wife very, very soon. And thanks again for being on our show, Stan. We really do appreciate it, and congratulations for being in Timer Digest like you are, because that's really a great kudo to you and your work. So you should be very proud of yourself.
Well, thank you, Larry. Thank you. It's my pleasure to be your guest.
You bet. Thanks again. Stan Harley, the Stan Harley Stock Market Letter. Folks, keep an eye on the S&P. We need it to get above this 2370, which is some pretty stiff resistance. And if we can do that, then we can continue to go higher. We've had this huge rally. Like Stan was saying, we had a big move in Europe so far, 2% early in the morning. But as we know, that's amateur hour. So be really careful here, because these markets that go up also can come down. Keep an eye on the gold market, folks. We're getting close to a buy. I don't know when it's going to be, but it's getting close. So that's pretty much what we're looking at today. Tomorrow we're going to have Bill Meridian, another Market Timer Digest winner from Cycles Research, Vienna, Austria. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.